after this rejection here, as you can see, the price was rejecting off. The price rejected off a strong level of demand, bought to this place. Look at, you could see it broke all this structure. You could see it broke all this structure. 1, 2, 3. This alone should tell you that the price is ready to change from a sell trend to a bullish trend with all this structure that broke here. Now, how are we supposed to know where exactly to buy from if we wanted to trade FOMC, or if we wanted to trade this trend? Basically, if we wanted to catch a buy from this place, that's where our Fibonacci retracement comes in. As always, don't forget, you only need your 50%. You want to buy from the equilibrium, which is this. You see, that's what we want to buy from. Let me just delete this very fast. So this is what we want to buy from. This place is what we want to buy from. You see, one thing you have to know is that whatever the price is doing from here, provided it hasn't gotten to your 50%, provided it hasn't gotten to your 50% level, your equilibrium, your premium or discounted level, you have no business with whatever is going on here. That's just one thing you need to know. You see, observe how the market did, like it was buying. It was ready to buy from here already and just want to go. That is a liquidity formula right there, and that's what we call an engineered liquidity. That's what we call an engineered liquidity. And if you studied your liquidity well, you will know that all you just want to do is wait for price to sweep that liquidity, sweep it, and mitigate the nearest discount level or your equilibrium, which is our 50% from here. And you buy all the way from this place. Now the price has gotten to our equilibrium. How do we want to know it's time for us to get in? We definitely just don't want to get in because price is now sitting on a major demand, right? That's where our chart pattern come in. You can actually use chart pattern, double bottom chart pattern, which is, this is our first leg, and this is our second leg right here. Our second leg is where we want to look for our entry, or we are dealing with FOMC. So this is where the price, but from this is where the news. So this is where the news came out. You could see this is where the news came out. And from this place, look at how high it pushed aggressively upward. Yeah. So one thing you have to know that must have caused this aggressive move is that both technical analysis, fundamental analysis, and in fact, I would say even sentimental analysis, everything was actually lining up, was actually falling in place. That's what caused this price to move aggressively like that. It was like triple threat, so the pressure was too much. The technical aligned, the fundamental aligned, and even sentiment, the overall bias, how people perceived everything, how people was perceiving the market. The majority of the traders were actually planning to buy. Those three factors are what made the market move so aggressively like this. And of course, even with all this huge move, I wouldn't advise you to have targeted all this move. I'm a big preacher of the realistic take profit, so we want to use something like this, the swing highs, somewhere the price will definitely get to. So if you had entered from this, where this market was rejecting from, after I saw that bullish candle close, let's say that's your entry, right? You enter from there and this is your exit. That's where you would have been planning to come out. That's where you would have been planning to jump out, because the market will not give you, or because you think the market will give you 1 million pips doesn't mean you want to hold your full trade to go to you want to hold your full trade for a home run. No, less is more. Target, like, be strategic with your just as much as you are very patient to look for a very good entry. You want to be patient and very strategic to look for a very good exit as well. just to avoid just to avoid story for the gods or story that touches the heart. It's very important, because imagine immediately the price go to that level. What if the price just does something like this and sold off aggressively again? Yo, it would have been so painful. So I hope you learned one or two in this video. Smash the like button, share, and follow for more. Peace.